Here's a summary of Moderna's Q2 2025 earnings call, focusing on key financial metrics, management commentary, and future outlook. Moderna Q2 2025 earnings call summary: financial performance and outlook. Revenue. Moderna reported $142 million in total revenue for Q2 2025, comprising $114 million in net product sales, primarily COVID-19 vaccine sales, and $28 million in other revenue. This represents a significant year-over-year decline, largely due to the absence of a large upfront licensing payment received in Q2 2024. Net loss. The company posted a net loss of $825 million, $2.13 per share, in Q2 2025, an improvement from the $1.3 billion loss in the prior year quarter. Cost of sales. Cost of sales was $119 million, relatively flat year-over-year, but represented 105% of net product sales, a substantial increase from 62% in Q2 2024, driven by lower sales volumes. R&D expenses. R&D expenses were $700 million, a 43% decrease year-over-year, attributed to the wind-down of respiratory trials and portfolio prioritization. SG&A expenses. SG&A expenses were $230 million, a 14% decrease year-over-year, reflecting broad-based cost reductions. Cash position. Moderna ended the quarter with $7.5 billion in cash and investments, down from $8.4 billion at the end of Q1 2025, primarily due to the operating loss. Full year 2025 revenue outlook. The company updated its full-year revenue projection to $1.5 billion to $2.2 billion, a $300 million reduction at the high end. This is primarily due to a timing shift of UK COVID shipments from H2 2025 to Q1 2026. U.S. product sales. Projected at $1.0 billion to $1.5 billion. International product sales. Projected at $0.4 billion to $0.6 billion. Other revenues. Projected at approximately $100 million. Full year 2025 expense outlook. Cost of sales remains unchanged at $1.2 billion. R&D expenses lowered to $3.6 billion to $3.8 billion from $4.1 billion, reflecting trial wind-downs and portfolio prioritization. SG&A expenses expected to remain at $1.1 billion. Capital expenditures lowered to $300 million from $400 million. Cash cost reduction target. Moderna reaffirmed its commitment to reducing annual operating expenses to $5 billion or less by 2027, with a cash cost target of $4.2 billion. They are on track to achieve the first $5 billion of a $6 billion GAAP expense reduction plan in 2 years. Q2 2025 year-over-year cost reductions. Cost of sales and SG&A combined reduced by 35%. Operating expenses on a cash cost basis reduced by 40%, $581 million. An additional $400 million cost reduction plan for 2025 was announced, including a workforce reduction of approximately 10%. Cash break-even. The company remains committed to achieving cash break-even on a cash cost basis in 2028. Key highlights. Product approvals. Secured 3 significant U.S. FDA approvals: mNEXSpike, next-generation COVID-19 vaccine with higher efficacy; mRESVIA, RSV vaccine for high-risk individuals aged 18 to 59, and already approved for those 60-plus globally; Spikevax, pediatric full FDA approval for the COVID-19 vaccine for high-risk children aged 6 months to 11 years. Clinical progress. Seasonal flu vaccine. Announced strong Phase 3 efficacy data, which will support discussions for flu and flu plus COVID combination programs. CMV vaccine, mRNA 1647 accrued sufficient primary endpoint cases for final analysis, with an amendment to the analysis plan to include powered secondary endpoints. Results are expected in the fall. Norovirus vaccine, Phase 3 study, is accruing cases in its first season. Rare diseases, propionic acidemia, PA, program is in a registrational study with potential 2027 approval. Methylmalonic acidemia, MMA, registrational trial to initiate this year. Oncology pipeline, advanced individualized neoantigen, intismeran, therapy, including a Phase 3 trial in adjuvant melanoma and a new Phase 2 study in first-line metastatic melanoma. mRNA 4359 is in Phase 2 studies. Cost reduction efforts demonstrated strong commitment to financial discipline with significant year-over-year reductions in operating expenses and the announcement of further cost-cutting measures. AI integration. 100% of knowledge workers are active daily users of ChatGPT, with enhanced AI tools for deep research and improved efficiency. Legal victory. UK Court of Appeal upheld the validity and infringement of Moderna's patent against Pfizer and Biotech. Lowlights. Lowered revenue guidance. A $300 million reduction in the high end of the 2025 revenue outlook due to a UK shipment timing shift. Declining product sales. Net product sales declined 38% year-over-year, reflecting the seasonal nature of the business and market dynamics. High cost of sales relative to sales. Cost of sales at 105% of net product sales highlights the challenge of achieving profitability with current sales volumes. Workforce reduction. The difficult decision to reduce headcount by approximately 10% impacts employees and reflects adjustments to the company's cost structure. Management statements. Stefan Bancel, CEO, emphasized the company's progress on its 3 strategic priorities: driving commercial product use, advancing the pipeline, and executing with financial discipline. Highlighted the importance of the recent product approvals in bolstering sales growth. Stressed continued focus on cost reduction, stating they are not done and aiming for further savings. Expressed confidence in the company's ability to streamline operations and achieve cash break-even targets. Spoke about the positive impact of AI on business processes and efficiency. Looked forward to upcoming catalysts, including potential approvals for flu and flu-COVID combination vaccines, and CMV Phase 3 data. James Mock, CFO, provided a detailed breakdown of the Q2 financial results, noting the improvement in net loss despite lower revenues. Explained the drivers behind the updated 2025 revenue guidance, primarily the UK shipment timing. Detailed the ongoing cost reduction strategy, emphasizing the planned savings and the workforce reduction as necessary steps to align the cost structure. Outlined the path to achieving 2027 operating expense targets, driven by R&D efficiency, manufacturing improvements, procurement savings, and headcount reductions. Confirmed that pricing and contracting for the U.S. COVID vaccine market for the upcoming season are complete and factored into the guidance. Future expectations and risks. Increased sales growth. Management is focused on driving sales growth through the utilization of newly approved products and advancing the pipeline to secure up to 10 additional product approvals targeting a $30 billion market by 2028. Cost savings. The company is confident in its ability to achieve significant cost savings through various initiatives, aiming for cash break-even in 2028. Uncertainties. Key risks and uncertainties include vaccination rates, the competitive market environment, the size of the RSV market, and the timing of regulatory approvals for factories and products in other countries. CMV data. Investors will be closely watching the CMV Phase 3 data, with potential secondary endpoints adding value to the assessment of the vaccine's benefit. The timing of this data is expected in the fall. Flu and flu-COVID combo. Regulatory consultations for the flu and flu-COVID combination vaccines are underway, with a potential sequential filing strategy for the U.S. market. In summary, Moderna's Q2 2025 call presented a picture of a company actively managing its costs, securing important product approvals, and advancing a robust pipeline, while also navigating a challenging revenue environment. The focus remains on driving long-term growth through diversification and operational efficiency.